Thank you for coming to our session on property. I'm Susie Crew, Client Director at the European Tax Practice in FiscalReps. And this is my colleague Indirect Gonzalez, who is a Client Manager in the European Tax Practice at FiscalReps. Why are we going to talk about property? Well, it's a pretty big deal for a lot of insurers. I think of our 300 clients, over half of you are writing property. So there's a lot of you writing it, and there's a lot of different rules across Europe. We don't just do tax returns at FiscalReps. We try to have fun too. So don't know if you remember Monopoly. We sort of took the Monopoly board and tried to think of it as, I don't know, when you tried to build up a property empire, it was so much easier on the first, from go, on that first section, the second section, and then it got really quite hard by the time you came to Park Lane and Mayfair. The Park Lane and Mayfair of property taxes are in Spain, so Indirect Gonzalez will spend quite a lot of time talking about Spain. But just in general terms, thinking about Europe in particular, two types of ways of calculating charges, taxes. So we make a difference between parafiscal charges and indirect property taxes. Parafiscals generally, they act like a tax, they look like a tax, but they are probably funding a particular reason. So storm, flood, fire are two good examples of parafiscal charges. Indirect property taxes, many different ways of calculating, and we'll have a little whirlwind now through Europe. So starting in the easiest territory to probably deal with, Great Britain, for many reasons. The tax legislation is clear, there are guidelines, the rates are easy. Fire brigade, we know, is £35 for £1 million of sum insured. Great Britain IPT rate of 6%, with the exception of 20% on domestic appliances sold through a supplier. Iceland is one of these territories which is very fond of setting up parafiscals, and they, even though the rates look really low, actually in Iceland you can end up paying quite high sums because often they're using sum insured, even though it's 0.000 something of a percentage. Quickly skipping past jail, which it can always be a risk when dealing with insurance taxes. Belgium. Belgium is a good territory to be writing property in. If there are ever any doubts about how to apply INAMI are very open to giving an opinion, well, not just an opinion, giving a decision on how that particular policy may have INAMI applied. Quickly going over to Denmark there. Denmark have recently increased the rate on storm flood damage from 30 DKK to 60 DKK per policy. Part of that increase is expected to be reduced in 2017, and it's making up for a shortfall to repair storm damage. Going into Portugal, we understand that there is a general market practice for the ANPC to split 30-70 splits for fire if it's not already split in your policy. Coming up to the tax exemptions box there, we've put a picture of a farm. There, across Europe, are lower rates, sometimes exemptions for agricultural risks. Taking Italy, for example, a normal property risk may be charged at 21.5, a agricultural risk at 12.5, a nuclear risk at 2.5%. Coming there to Ireland, which actually, I was saying about Great Britain being quite an easy tax authority to follow. Ireland, for me, probably comes second. Again, quite clear, easy legislation to follow, guidelines, open tax office. Ireland has been talking this year about putting in a storm damage levy, but they have taken back that decision and it will not be going ahead for now. getting now towards the more Park Lane, Mayfair end of things on the Taxopoly board, the provinces in Spain. They have, you probably know, enacted legislation which dates back to 1981, enabling them to collect their own taxes. France and Spain and this kind of area of the board, we sort of ran out of time on the more technical end of the presentation, so I think I'll hand over to Natharet. Sorry. Let me quickly run through the agenda now that we've had that fun on the Taxopoly board. So we're going to quickly run through location of risk, global policies, and then we're going to spend most of the session talking about France and Spain. So what is location of risk? Why is it so important? You might think, well, property, that's pretty obvious. My factory is in that place, therefore that's where that risk is. Had a call from a client last week who said, I've got a letter from Luxembourg Tax Authority. They've asked for 4,000 euros because a gas pipe that we insure and we paid for in Belgium, part of it is actually in Luxembourg, and they're asking for the taxes. So it's not always that easy, and you can get caught out by location of risk on what you might think is fixed property. Movable property, going back to the Taxopoly board, we had a picture of the Mona Lisa there in the top right corner. If the Mona Lisa is moved from Paris to Madrid, let's keep it simple for Spain, then the location of risk of that piece of art moves to Spain. Contents follow buildings, so even if it's on two different policies, the contents are where they're located. There's a bit of a misleading question there at the bottom of this slide. How are goods in transit treated in your company? Well, that's subject to a whole nother breakout session, another year perhaps. But goods in transit can actually change to goods in storing. If they're left for a particular period of time, I believe in Belgium, 90 days, they become goods in storing and therefore subject to property taxes. So lots has been done to write the policy. Regulatory issues have been considered, the terms of coverage, and then we get sort of into the taxes where premium apportionment, fire and non-fire splits, there's different calculation methods, different tax points across Europe to consider, and then whether it's a tax or a parafiscal charge. This obviously all has a knock-on to the pricing of the policy too, so it's a bit of a catch-22 situation. Moving on to Spain.
As Susie said, we are going to be talking about Spain and France more in particular because we believe they are the most complex countries in terms of property. Before I start talking about the tax points, the IPT and the Fabricate, I would like to mention how important it is to get authorized properly in Spain and registered. As you probably know, Spain is one of the remaining countries that are requiring a fiscal representative to write business there. So it's really important to have this authorization in place to be able to appoint a rep, and after that to be able to get authorized and register with the different tax offices and consortia, etc., to write, to pay your taxes. Why do I want to talk about the tax point in Spain? Pretty obvious, because we got more than one tax point in the same country. We got cash receipt for IPT, and we also got inception day for consortia. It's quite important to make sure that you pay your consortia surcharges on time to be able to claim in case of a natural catastrophe to consortia to pay the claim to the policy holder. I believe that this is a big issue for some insurance companies in terms of cash flow. I was discussing this in the last session. Consortia is quite approachable, and we had recently some companies trying to have like a different agreement with consortia in terms of the tax point to be able to pay the taxes for that to them. I don't know if you got these problems or it's something that is not relevant to you, but if you feel that you got a big issue with the cash flow and you want to discuss this with consortia, they are quite approachable and they will be happy to discuss this on individual basis and give you a different treatment for it. So just let me know if you got this problem, and we can discuss this further later. In terms of IPT, as Susie said, now we got 4 provinces in Spain that decided to use their right to collect their own taxes. There are the only 4 provinces with these rights in Spain. They had these rights back to 1981. However, they just decided to use the power to collect the taxes due to the critical situation, economic critical situation that is in Spain at the moment. For this reason, you just not only need to get registered in the central administration, you also need to get registered in these 4 provinces and submit different returns for all of them. In terms of global program, it's quite important just not to know in which country you got the risk, also where is your risk in Spain in particular, because depending where you go located your building, your industry, factory, you're going to be paying taxes to one tax office or another. I don't know if you got any questions, please feel free to stop me anytime that you wish to. In terms of fabricate charge, before I go to fabricate charge, just say that it's a 6% rate, quite flat, quite low compared to other European countries. It doesn't look like it's going to change in future. We got elections next year in the country, and they are more worried about this at the moment and thinking about increasing rates. So going forward, I think we're going to just keep this rate and wait for any changes. In terms of fabricate charge, in Spain there are over 200 municipalities that they got their own right and their own legislation to collect fabricate charges. So it's quite difficult for an insurance company to deal with this by themselves. They need to use what they are using a trade body called UNESPA, or one department, the trade body called Gestora, which deals with all of these fabricate charges and contact the municipalities on behalf of the insurance companies to deal with all of these charges. Important to know about the fabricate charge, if you want to get registered with Gestora, it's once every year. It's a long process to get registered with, but you don't pay any fees. They do it for free. They just try to help the insurance companies to pay all of these charges. Something to mention about the fabricate charges in Spain is one of the municipalities back in January 2013 decided to increase the rate. So instead of paying 5 and 2.5, in addition in Spain, you need to pay a 7.50% fabricate charge rate. Why? The story is quite funny, or I found it quite funny. This municipality in particular haven't got fire stations or buildings nothing to deal with fire. They are using Madrid's fire stations every time they got fire that they need to extinguish. Madrid is billing them 2 million every year for this service, and they couldn't afford that bill back in 2013, so they decided to increase the rates and make the insurance companies pay for this. Obviously the insurance companies are not particularly happy, and they took this municipality to court. Probably the resolution of this will be in like 4 or 5 years' time. It's quite slow in Spain if you take someone to court. So in the meantime, you need to pay these charges to this province. Maybe in 5 years' time, the resolution is that the municipality needs to pay all of these insurance companies back, but so far it's a requirement, and they got the rights to do it. In the same instance, all the other 200 municipalities got the right to do this, so if they decide tomorrow to increase their rates, it's nothing the insurance company can do about it. They just need to deal with it, so you need to keep an eye on all of these things. In terms of who pay the tax, it's quite important to know that, and have been loads of debates about it, about the fabricate charge. It's something that cannot be charged to the policy holder, cannot be shown on the invoice. It needs to be included in the premium. The market practice, however, is taking a different approach, and most domestic companies are showing this on the invoice and are charging this to the policy holder has been a recent case where a big important insurance company has been taken to court in Spain for this, and the resolution was a million penalty for this company to do this. So maybe you want to have a look and see which approach are you taking on this. If we talk about the consortium's charges, everybody thinks how difficult is it. I don't want to know anything about it. Just do it for me. It's not just the tax point that is quite a big problem for insurance companies. It's also the calculations that need to be done to pay these surcharges. We will be doing a couple of exercises later to see how we deal with these calculations, and I would promise you that you will think after this that it's not as difficult as everybody says. Something to consider as well, I always want to let people know how many returns are we submitting every year in Spain for you guys. If you are writing property in Spain, we are submitting on your behalf 112 returns every year. It's just not that we need to deal with Consortio and Fabricate. Now we need to add all the provinces, and the returns they got different filing deadlines, different returns, different ways to do things, and we need to deal with all of them on a monthly basis. Have you got any questions so far? Anything that you want to know that I haven't mentioned?
Excuse me, President.
Yeah.
Do you mind to go back to the previous
Sure.
slide, please? You know, you mentioned Rivas, Madrid.
Yeah.
That's not one of the provinces, yeah?
No. This is quite close to Madrid. That's the reason they are using Madrid's parts.
But it's like, if you have a property there,
Mm-hmm.
you're going to pay the money to Madrid, I suppose, to the tax authorities in Madrid. Yeah? So the tax authorities in Madrid are expecting to receive 5% fire charges. So how do you make the difference? You say to Madrid, oh, hold on a second, this policy is for Rivas was in Madrid, therefore I pay you 2.5% more.
Yeah, they got, what we do is to pay the 5 and the 2.5% to Gestora, and Gestora deals with Madrid, and then we also pay directly to this municipality in particular, the 7.5% on behalf of our clients, so we are dealing directly with this municipality to pay the additional 7.5% to them.
Okay.
Yeah, makes sense for you? Yeah. Any other questions? I just put here a quick exercise. I believe you had new calculators today, and I'm sure you are really pleased to use them. So we can go through the calculation together, or you can try and give me the answer and look really good in front of everybody else. Up to you. But basically the exercise is telling us there is a factory located in Madrid, which is good because we don't need to think about the 4 provinces. We are just going to need to pay to the central administration. It's a property damage business interruption, and it's giving us the premium and also giving us a lot of details about the type of risk, the coverage period, the capital insured for damages, for loss of profit, and the limit of indemnity. Would you like to give it a go? Give you a minute, and you just need 30 seconds of that minute. Shall we go through the calculation together? Are you nearly done? Would you like? No, shall we? The first question is, what are the classes of insurance cover? Really simple question. We are saying it's a property damage policy, so class 9, other damaged property. What are the premiums, taxes, and paraphysical taxes due? As we said that we are submitting 112 returns every year, it must be more than one tax to pay in every policy. In this particular case, we have IPT, we have Fabricate because it's another damaged property, other damage to property policy, and obviously we are paying 2.5% of this. The exercise is not telling us in which part of Madrid is located, so we are just going to pay the 2.5%. Then we also got the Modelo 50, which is the winding-up activity surcharge, and the consortium surcharges, Modelo 10, property damage, and Modelo 11, business interruption. In terms of IPT, really a straightforward calculation, premium times the 6% rate. The Fabricate charges, again, the premium times the 2.5%, and the winding up activity, the premium times 9.15%. Straightforward, really easy. I cannot believe that people are telling me all the time that these calculations are so complex. I'm sure we are all up to here, right? Yeah? In terms of consortium surcharge, yes, sorry. We are dealing with this now. Yeah? For the business interruption, we just need to consider the business interruption for consortium surcharges. Yeah? So we are dealing with this now. In terms of property damage and business interruption consortium surcharges, we need to use the details I gave you in the first slide, which is the type of risk. We know that it's an industrial type of risk, so we know which rate we need to use. It's a different rate depending the type of risk that we got in our policy. It can be more than one risk, and then the calculations get more complex, but in this case it's just one. We got the sum insured for damage, we got the sum insured for business interruption, and the limit. Quite good that the limit is the same than the sum insured, so we don't need to use any reductors, any complex calculation. It's going to be all straightforward. In the real life, it's not that easy. I just make it to make you feel that you know what we're doing. And also something to consider is the coverage period and the loss of profit indemnity period is different. A lot of insurance companies are not looking into these things, and the calculation will change. If you don't take into consideration that the coverage period and the indemnity period for business interruption is different, you are probably going to underpay taxes, or surcharges in this case. So for property damage, we take the sum insured times the rate, which is 9.21 divided by 1,000, 94.50. And for business interruption, Modelo 11, we take the sum insured, which we said is the same than the limit, so we don't need to do anything about it, times the rate, 9.25 divided by 1,000, and this is what I was saying about the periods. We need to prorate and make it up to 18 months because this is the worst case scenario, and that's what consortium we will pay in our behalf in case of a claim. So we need to make the calculation for 18 months instead of 12. And it's 13.13. Any questions up to here? I'm sure you all had the right answers. I'm not going to check, but I trust you.
That rate of consortium only applies for class 9, yeah?
The rate that we are using, 9.21 per 1,000, depends on the type of risk. So in this case, we got industrial. We can also have offices, small industries, or dwellings. Depending on the type of risk, we will use a different rate.
Okay, you go by the risk, you don't go by the class. I say, in this policy that you gave an example was class 9.
Exactly. So we know it's class 9. In order to pay the consortium surcharges, we also need to know the type of risk. You need both. Yeah? Something to take into account at the bottom of the slide is the 5% commission that consortium is giving back to the insurance company for a prompt payment. So they are saying, thank you for being my collector for these surcharges and paying me. I'm giving you back 5% discount kind of thing. Some companies got a problem with this 5% commission because they need to put in the books as profit. And sometimes when you got an audit, it's quite difficult to show that you are having this 5% back. I don't know if you had this experience before, but it's something that is happening quite often. That's Spain. I don't know if you got any questions regarding Spanish taxes, anything that I haven't said and you were quite keen to hear about. If not, I'm going to move on to France. Again, for France, I'm going to talk about the tax point, which is quite different to the Spanish ones. In this case, we are talking about maturity date tax point. When I asked my colleague Christophe, which is the one that is dealing with all of these French taxes, he gave me two different answers for maturity date. He said to me, it can be the date that the premium is due to be paid, like in most countries, and can also be the date the contract is issued or renewed. It's up to the company to decide which one is taken. The tax office in France always said to Christophe, I just want the insurance company to be honest and consistent. The legislation is not really clear, so can be challenged, but if you do, make sure that you are consistent on what the approach that you are taking. In terms of the split between fire and fire, the market practice is 70%, 30%. However, you can know your split and you can apply accordingly. Again, you just need to make sure that you are consistent in the approach that you are taking. In terms of IPT, I put here the 9% rate for non-fire premium and the 7% fire premium. Something to take into account for the fire premium is that if you go a private property, instead of 7%, you are going to apply 30%. So you need to make sure that you know which type of property you go in this and in the policy, so you can apply the right rate. Obviously, they are quite different, and the calculation is going to differ quite a lot depending the rate that you are using. Instead of, in terms of CATNet, we go the IPT and the MRPF. The CATNet premium is 12% of the premium, the taxable premium, and then the IPT based on this CATNet premium is 9%. The market practice here is got different views on how to apply the IPT on the CATNet premium. The legislation is not clear, so it's up to the insurance company to decide how to approach this. We know that some domestic companies in France have taken the approach to use the same rates they are using for IPT, so if they are using 70-30, they are using the same for CATNet. It's an alternative way to deal with the CATNet IPT. We have seen in the past that some companies are taking this approach, but most of our clients are using the default rate of 9% and just dealing with it. The difference between the CATNet premium and the MRPF, we all know that the CATNet premium is retained by the insurance company, and they got three different options on how to deal with the CATNet premium. They can retain the premium themselves, and if in case of a claim, they can deal with the claim. They can also have a reinsurance with the French state, which they will help in case of a claim up to 50%, or they can reinsure with a private company and deal with it in case of a claim. They will both be paying out to the policyholder. The CATNet premium is used for natural catastrophes. I guess the name is giving you a guess of what it's using for. And the MRPF is used for owners to indemnify owners of had a building and had a natural catastrophe in it. So they're two different things. In terms, I'm gonna quickly go further to the Garriott and the terrorism charge because I ran out of time in the last session and I don't want to happen the same in this one. If you got any question, please stop me. In terms of Garriott and terrorism charge, the terrorism charge is to indemnify the victims, and the Garriott is for buildings. If you go a terrorism attack in France and your building is damaged, they will use the Garriott pool to pay for it. What do you need to do for the Garriott pool to pay the claim out for you? You need to join them. Up to 20 million sum insured is up to you to decide if you want to join this Garriott. Over 20 million is compulsory and you need to join them and make sure that you pay towards them. The rate again is a 9% flat rate for the Garriott IPT, and the terrorism charge is a fixed rate of 3.30%. Have you got any questions on this? Anything that you want to discuss, that you not agree with me? I tried to ask Christophe as many questions as I could to make sure that I was giving good, my understanding was good enough to give this session out. Again, we got another exercise, those calculators out. Shall we go through the calculation together just to make sure that we finish the presentation together? What are the classes of insurance cover? In this case, it's not like the Spanish one. Even if we got the same situation, we got a factory located in Paris, it's property damage, business interruption risk. We got the premium, which is 50%, and we know the apportionment between fire and not fire, which is 30-70. We also know that 20% is business interruption and 50% of the policy is other damage to property. If we look in which classes of insurance are we covering in this policy, for Spain it was just class 9. However, in France we got fire, other damage to property, and miscellaneous financial loss. Which are the premiums, taxes, and parafiscal taxes due? As we said, IPT, MRPF, and terrorism charge. These are the calculations that I made for this example. So in terms of IPT, we knew that it was 50% of the damage. So we are timing the premium by 50% and then times the rate, 9%, and the other 50% times 7%. Then we got the CATNA IPT, the MRPF, and the Garriott. They are quite straightforward calculations. Something to mention is, for example, that the MRPF cannot be invoiced to the policyholder in the same way that the Fabricate charge in Spain cannot be invoiced. And pretty much it's not difficult. You just need to make sure that you remember to pay all the taxes that are due for a property policy in France. We also go, I put here another example. It's more the same, it's the same calculation just to show that the difference between France and Spain. Both got loads of taxes to pay and surcharges. However, the Spanish ones look a little bit more complex because they got different rates depending on the type of risk. You need to take into consideration the limits, the sum insured. For France, it's a little bit more simple, but even of that, you need to remember to pay all of these taxes. I don't know if you've got any questions before we finish. Yeah? I put it at the bottom. So the insurer is paying the IPTs and the terrorism charge, and the insurance company is paying the MRPF. Yeah, it's retaining the CATNA premium as well. Yeah, and it's paying out the Garriott for the Garriott pool. Yeah, the IPT for the Garriott pool. Sorry, can you? Yeah. It is the market practice. If you don't know the split, the market practice is using 70-30, but if you decide to use 80-20 or 60-40, it's up to the. Yeah.
Is this on the terrorism? 330? Is the 330, is this your question? Is the 330 paid on renewal of policy, or is it just paid the once?
I believe it's paid once, but I can double check it with Christophe to make sure. You catch me in that one. Yeah. Sorry? Yes, something that I haven't mentioned. Yes, thank you. I did it in the other session, but I haven't done it in this one. For the Garriott IPT, I put here the 9% tax rate. However, depending on the sum insured that you go, the rate will increase or decrease. I think just increase, no? I got it here. So depending on the sum insured, if it's between 6 million to 26%, between 20 and 50, 12%, and over 50 millions is 18%. I believe that some insurance companies have meetings with Garriott and have an agreement in which rate they are paying. So you can, the same way that you can talk to consortia, you can go talk, they are pools and they are there to help insurance companies, so they are quite approachable and they let you decide which rate are you paying. One rate. Yeah. Sorry? Oh, sorry, I couldn't hear your question. It's just for the Garriott IPT. Yes. Yeah. Yeah, as we said, you can join, you can decide to join if it's under 20 million sum insured. If it's over, you need to join the Garriott, and depending on the sum insured that you got in your property policy, you will pay a different rate. Any other questions? Well, unless you want to say anything else, I say thank you for coming.
Thank you.